Have you ever wondered what happens behind the scenes when you hit send on an international money transfer? Is there a team of tiny bankers running around the world with briefcases full of cash? As funny as it sounds, it's not quite the case. In today's video, we will dive into the world of the SWIFT network, explore its inner workings, and help you decide if it's the right choice for your international transfers. Welcome to Leapfrog, a channel dedicated to making animated explainer videos, simplifying crypto and decentralized finance. If you're new here, be sure to subscribe. SWIFT, or Society for Worldwide Interbank Financial Telecommunication, is a global financial messaging network that was founded in 1973. It initially started as a telegraph-based system for transmitting financial messages, but quickly evolved into an electronic system using computers and standardized messaging formats. More than 45 million transactions are carried out through the SWIFT network every single day, making it the most common way to send money abroad. SWIFT allows different banks and financial institutions around the globe to communicate with one another about money transfers using a common language. The system secures itself by using a combination of physical and digital security measures to protect the integrity of the messages and transactions. Let's understand this with the help of an example. Say you live in Australia and want to send a part of your salary to your family living in India. Instead of carrying cash or writing a check, you can use SWIFT to tell your local Australian bank to send the money to your family's bank in India. The message goes through a special computer system that makes sure everything is done correctly and securely. Your family can go to their bank after 3 to 5 days and get the money you sent them. It's like sending a secret code that only banks can understand and use to move the money. But what really happens behind the scenes? The SWIFT network usually involves 6 different entities. In our example, these are 1. You, the sender, who is living in Australia. 2. Your local Australian bank. 3. Intermediary Bank A, which is established in the USA. 4. Intermediary Bank B, which is also established in the USA. 5. Family's local Indian bank. 6. And the family living in India. Wait, did you say intermediary banks in the USA? Yes, you heard that right. To transfer money from Australia to India, your bank in Australia needs to have an account in the Intermediary Bank A where it can store its money in US dollars. Similarly, your family's bank in India will also have a bank account in Intermediary Bank B where it will store its money in US dollars. Why do these intermediary banks need to be based in the USA? Because only banks with a US banking license can hold US dollars in their account. It is for this reason that almost every country in the world has a bank account in the USA. Isn't it crazy? Now, coming back to our example. When you initiate a transaction from Australia and deposit your Australian dollars or AUD into your local bank will send an encrypted message through the SWIFT network to Intermediary Bank A. The message contains specific information about the transaction, including the recipient's bank account details, the amount to be transferred, and any other relevant information. Once the message is authenticated, Intermediary Bank A will transfer the money to Intermediary Bank B in US dollars. Intermediary Bank B will then forward the message to your family's bank in India. The Indian bank will then decrypt the message and authenticate it to ensure that it has not been tampered with in transit. After confirmation of the same, your family will finally be able to withdraw the money in Indian rupees or INR. Since it's a cross-border payment, the original currency, the Australian dollar in our example, has to be converted to the destination currency, Indian rupee. One of the banks involved will usually do the currency exchange from AUD to USD and then from USD to INR. Now that you understand the entire process, is SWIFT the best way for individuals or businesses to send money abroad? At Leapfrog, we don't think so. Here are a few reasons why. First, SWIFT is not designed for real-time transactions. Once the transfer is initiated, payment can take 3 to 5 days to complete. The involvement of intermediary banks prolongs the entire process. Second, SWIFT money transfers are pretty expensive. There are usually 4 entities involved apart from the sender and the recipient parties, and they all charge some amount of fees which can add up for frequent or large transfers. Third, not all countries and banks have SWIFT connectivity, which can make it difficult to send money to certain places which are not part of the network. Fourth, the process is cumbersome. Users are required to input a lot of information, including the SWIFT or BIC code and the recipient's IBAN or bank account number. And finally, SWIFT is a centralized system, which means that it is controlled by a single organization. This single point of failure can lead to potential security risks. So, what should you use instead? We believe that the future of money transfers lies with cryptocurrencies. Using crypto, you can transfer money directly from your wallet to your family's wallet in a matter of seconds. There are no limitations to the amount, and your transactions are secured by a decentralized network. We would love to hear what you think about SWIFT versus crypto. Please share your thoughts in the comments below. We hope you enjoyed watching this video as much as we enjoyed making it. Please make sure to hit the like button and subscribe to the channel. We make these videos every week, and your support keeps us going.